Good morning, YouTube. Today I want to take a few minutes and go through the context of some investment decisions that I've shared with you. One of the decisions is a house that I bought 2 years ago, and so I want to show you kind of how I moved from not doing investments, for instance, to building to the place that I could do an investment such as that house I bought a couple years ago. And the cash flow on that was challenging, and you saw the returns were great. And so let's get right into it. You'll see the spreadsheet here. This is the initial purchase that I made a video on and how I expected it to come out when I bought it. And then if you just look down, this is the second video, which is here's the rents for 2 years, projected the third year, and the returns on this investment over this period of time. 110% on my investment, and you think, man, I wish I could do that, but I wanted to share with you the content. These are the things I did first and second and third to get into the place I could do this, and so those are below, and we're going to zoom in just a little bit. And this is just about giving you context for that investment decision so you kind of understand how they flow. Most people are down here where they're putting money in their bank account, and it's more of like a buffer, and they're going to spend it here. I mean, spending a buffer, and you look at the cash flow on that, and there's really no cash flow coming in. And you look at the bank increase in value, and there's no increase in value. And so a couple things you're looking for from an investment is you're looking for an increase in value, and you're looking for a cash flow eventually. And some balance of those two is what gives you your profit, which ultimately is what you're looking for to increase your net worth. Profit can be in capital increase, profit can be in cash flow, profit can be reinvested in the property, and that's really what you're looking for. So most people are here, and they're looking at the video and saying, I'd like to buy a rental house, but I just hadn't pulled the trigger. They call it like pulling the trigger, right? And so the next step from having a bank account with zero is to understand that you're looking for something that increases in value and something that pays you what I call a trickle while you own it, and that is an investment. And so the easiest investment to do when you really don't know how to do investments is something like a broad market index fund. That's what I do. I do one called VIG. There's also a Vanguard one called VOO, which is good. And you would do an automatic investment in that over a period of time. And as you see here, just figuring on an 8% increase, which is reasonable with inflation being almost 8%. And then the current dividend, which is 1.7 on that ETF. And then maybe a 15% tax rate on that. Then you're starting to, once you get the same amount of money that I put into this house, which is about $50,000, now you have a value increase year over year over year to start with, and you have a cash flow. And the thing I like to talk about and say is if you take this situation and you multiply it times 10x, and you save more, you still are in the situation where you've got zeros across the board. If you take this situation, which is easy to get into, and you multiply times 10x, then you actually have a lot of increase and you have more cash flow. And so that means you're doing the right things. Even if you're not doing something aggressive, this is probably the second thing to do. The third might be to acquire some individual stocks. Home Depot is one that I own. And you can just take part of your VIG, and maybe I'd have some cash, maybe 20-30% of what you have. Maybe half what you have in this VIG, and then there's maybe 20% that you put in individual stocks that you like, watch over a long period of time, and understand that that's where you're kind of learning about how to invest. So individual stocks might be third. Then you're looking for some type of investment that's actually what I would call an investment that you can have a moat in and a payout. And so if you find you look at a house for a long time, you look at an area, you're willing to find over a year one that has an advantage at the price when it first comes on the market. Maybe it ends up being next door to you. Maybe it's somebody that wants to sell a house, and they want to get rid of it fast, whatever it is, or has some work, you can buy an advantage. So this is when you really get into investing, is when you can buy an advantage to the value of the property. And then, as you can see, this house has increased, so now you have the value increase. But on this particular property, I had a negative cash flow because a lot of risk occurred, and I expected up here to have a negative cash flow because of the place the market was and the interest rates. And so you have a negative cash flow. Where does that negative cash flow come from? Well, it comes from other investments. Once you have positive cash flows down here, then as you invest in this thing, then positive cash flow is not so important because you have that below. And maybe you're just looking at the total profit, and your total profit might be your cash flow plus this increase in value. As you can see, this increase in value on that 50,000 is way higher up here than it was before, and it will be higher every year after, which makes this a better investment. Now, after you have these houses or assets with this cash flow that can vary significantly, then you can look at things like bonds, kind of stabilize the income side of your portfolio, don't go up in value at all, but maybe you're just looking for something to balance out this cash flow because you don't like the negative cash flow. You can also just wait, 3 or 4 years, then you'll have the cash flow figured out, and maybe you have, every once in a while you have something you have to put in which is negative, but this gives you kind of a buffer. And then things like crypto come in kind of after that. Things that you're going to experiment on, things you're going to be in a small amount, see how they work, see if you can understand them. See if you can get to the point that you understand those, as well as what I explained to you about rental houses, how they actually work, how the year-over-year returns are. And if the returns in something like, Solana or Bitcoin, if they're not there year-over-year, then, stop doing it. It was just an experiment, and if they are, then you can kind of amplify that portion of your return. I've probably leaned into this rental houses quite a bit because, as you can see, the returns on the capital have been great, and I try to make the cash flow work with other properties and other investments so that I don't have to kind of eat this $10,000 a year versus my regular food budget and not eat, right? So I wanted to share with you context from a rental house purchase video and kind of an order of what you would start with today if you were going to work to the place that the next natural investment would be some kind of investment property. I don't jump into an investment property. I don't go from all zeros and an account and a job and then borrow a whole bunch of money and say, let's make this investment property work, right? And buy it at market value. That's what people do. They'll say, hey, do you think rentals are good value? Should I buy a house? Well, the answer is no. No, you should buy a house when you can buy it at $29,000 under value, when you have that skill set to find that house, fix it up, and you work into management. Now, you shouldn't go from here to here. At some point, maybe your VIG or your index funds gets big enough and you have some stock things and you have some income built there, and you say, boy, I could take 25% of my stocks and put them into rental house investment, and now I have both things. And by the way, the rental house might be close to me, might be close to someone I know the value, it's selling low, maybe the market's low at a certain point, and so there's an advantage for you to get into that. And now you have this variable cash flow investment, but it's going up every year. So eventually you're winning every year on this, even if it's not going in your pocket. And so that's what I would say. What's the next investments after this? I will let you know. These are kind of the things I'm looking at now. Commercial properties, I'm just doing a multiple house purchase, and that would follow a regular single house purchase. How does it work? I don't know. I will let you know later as that process matures and that closes and we see how it works out. So wanted to share that with you today. Hope that's valuable. Let me know in the comments and likes if this is the kind of content you like to see, and I will talk to you later. Bye.